Accountability is an extremely powerful tool to align an organization towards its objective. With this thought, we will start today's event with our college.
With man, Guru Brahma, Guru Vishnu, Guru Devo Maheshwaraha, Guru Sakshat Param Brahma, Tasmai Shri Gurave Namaha. Let us try and save some through our holy art. Guru Brahma, Guru Brahma, Guru Vishnu.
Sorry for the inconvenience, a little bit technical difficulty. Associate Professor and Head Department of Corporate Secretariat to deliver the welcome address and introduce the theme. And
ஆ அங்க மியூட் பண்ணி வச்சிருக்கீங்களா பாருங்களேன்.
introduce the theme. Now I request Dr. B. Hema, Associate Professor and Head Department of Corporate Secretariat to deliver the welcome address and introduce the theme.
Thank you, Masuda. Very happy morning to all. I'm happy to introduce the theme of ALS and welcome you all. At first, I would like to extend my gratitude and welcome to Dr. Mrs. Meena Muttaya, our secretary and correspondent, for his blessings and support in all our initiatives. I extend a very warm welcome to our resource person of the day, Dr. J. Fatima Fazana, PG Welfare Officer, Assistant Professor, School of Business, Department of Commerce, St. Joseph College, Autonomous, Bengaluru. Welcome you, ma'am. I welcome our principal, Dr. P.T. Vijayashree, ma'am, our vice principal, Mrs. R. Selvi, the faculty and students of KRMMC. My hearty welcome to the participants from other institutions. Under the auspices of Center for Business Studies, Faculty of Commerce and Management of KRMMC, Department of Corporate Secretariat is proud to launch yet another initiative, Academic Lecture Series ALS. The idea behind this initiative is to bring experts from various fields relating to the subjects and spread knowledge. As the first step today, the lecture is on the topic International Financial Reporting Standards by Fatima Ma'am. Frequent lectures will be arranged on different topics by experts. Now, may I request Dr. P.T. Vijayashree, Principal and Chair, Center for Business Studies of KRMMC, to launch the ALS and deliver the special address.
Good morning to one and all, and let me thank Madam Fatima for first accepting our invitation and also joining us for the inaugural session of this academic lecture series. I am very happy that under the banner of Center for Business Studies, the Faculty of Commerce and Management, Convergence, the Association of Department of Corporate Secretariat, has taken this initiative to launch continuous academic lecture series for the curriculum enrichment of the Faculty of Commerce and Management students. I wish all the students to take part in this and also have an idea and also an insight about all the topics which is discussed in this. It's a very good topic which is taken today, the financial reporting standards. I thank once again Hema for arranging this and her team. Because what is in need is the changing financial structure of the entire country and also the global level. We should be aware about the changing environment in the commerce and management fields, and especially on the financial area. So I want all of you to understand it and have a keen note on this, and also try to enlighten yourself in understanding the various concepts which are coming in this business world. Thank you once again. And by this, I open the academic lecture series. I launch it with the blessings of Meena Auntie and also from wishes from all the faculty members of KRMMC. Thank you.
Now, I request Ms. Sai Lavanya L of 3rd BCom CS, Vice President of Kumarani Meena Muttaya College, to introduce the resource person of the day.
Happy morning. We have admisses as the resource person, Dr. J. Fatima Farzana ma'am. She is an academician, is dedicated team player who always inspired young minds with her effective teaching skills and knowledge. She has graduated from the American College Madurai. She has completed her BCom, MCom, MBA, NET, KSET. Also awarded PhD in Commerce by Madurai Kamaraja University. She has been teaching for 6 years till date. She was participated and presented paper in national and international seminars and conferences. She is specialized in teaching accounting, finance, and taxation subjects for undergraduate and post-graduation students and accountancy for PUC students. She is a coordinator in organizing international conference on business dynamics and sustainable development, coordinator of execution committee, coordinator of the research committee for IPU. She is currently working as a PG welfare officer and assistant professor at the School of Business, St. Joseph College, Autonomous, Bengaluru. We are happy to have you as a resource person for today's lecture. Now I hand over the session to you, ma'am.
Thank you all. A very good morning to one and all. Am I audible?
Yes, ma'am.
Right. So I'll just mute or turn off my video so that there won't be any glitch from my side. Is the screen visible? It is a Mind Master.
Yes, ma'am.
Right. Fine. So I just want to break the stereotype of doing the presentation in a PowerPoint, both of it kind of. So I'll just start with a Mind Master view. This practice, normally I'm an ACCA tutor, that is UK Chartered Accountant. I'm a tutor of that. I'm a student of ACCA as well. So how we study for a professional course is like using mind maps and flowcharts. That is the right way of studying any professional paper. So I'm using that strategy to take over today's session. So these are the things which I'm going to cover in today's topic. That is, what do you mean by financial statements? This will be my first agenda. I'm going from right to left. Okay. So financial statements, users, and what are their objectives looking at the financial statement. Okay. Then requirements of IAS, why you need international accounting standard. Then the components of IFRS. After this, I'm coming to IFRS for your information. So components of IFRS, then transition. That is how IAS moved to IFRS. Then what do you mean by Ind AS and how the implementation plan worked in India. So this is in a nutshell, this is my topic area which I'm going to cover. So I want to have an interactive session throughout. So I'll be asking you various questions and you should be interactive. Otherwise, I feel very bored and it will not be productive as well. So just tell me, what do you mean by financial statement? And I'll tell you, I don't believe in book answer. What do you mean? I want that. What do you mean by financial statements? I want some answers as well, but I'm very bad in looking at the messages, whatever you're typing. So you can unmute and speak if that option is allowed. Is that such a tough question? I'm addressing BCom students. Can someone tell me?
Yeah. Profit and loss and balance sheet, ma'am.
Partly correct. Profit and loss balance sheet. Anything else? Okay. Right, but good. I'll appreciate your answer. Altogether, we'll call it as, shall I zoom it a little bit? Yes, is it visible now?
Yes, ma'am.
All this six, we call it as financial statements. As you said, SOPL, that is Statement of Profit and Loss. Statement of Other Comprehensive Income, you might not have heard this. I'll tell you what is it, but then statement of financial position, statement of changes in equity, statement of cash flow, notes to accounts. This is as per IFRS. I'm not speaking about Ind AS. As per IFRS, this is the what am I mean by financial statements means these all six. Okay, from Ind AS point of view, I'll come to that later. What is Ind AS? But from Ind AS point of view, what are called as financial statement? It is statement of profit and loss, statement of financial position, statement of changes in equity, statement of cash flow, and notes to accounts. Otherwise, we'll call it as disclosure notes. This five we'll call it as financial statements. This other comprehensive income is a unique feature of IFRS. So I'll use this writing pad to explain you about this. What do you mean by this statement of other comprehensive income as well? So any information is always good. Learn something different as well today, because this is purely from IFRS point of view. Now I'll share one more screen. I want a yes or no whether you can see it. Just a minute. Can you see the screen?
Yes, ma'am.
Right. Just a simple question. What is the difference between these two? So actually, these two together, we'll call it as SOPL, that is Statement of Profit and Loss. That what is OCI? This we call it as, in short, we call it as OCI. I'll tell you a very simple question. What do you mean by revaluation of, let's say, there is an appreciation of building. Appreciation of building means it's an income. So normally we'll write it in profit and loss account. But the question is, appreciation of building, it doesn't mean I'm selling the building. Correct? If I sell and I'm getting a profit out of it, then I will write in SOPL, for which I have to pay tax. But when I come to other comprehensive income, I will revalue the building, whether increasing or decreasing. I will revalue compared to the fair value, market value. But I will not put it in SOPL. I'll put it in the other one called OCI. Why means? Because whatever item I'm putting in SOPL is subject to tax. Whereas my building is revalued, but it is not, I'm not realizing, I'm not selling that building. So I will put it under OCI. Can you understand the difference between SOPL and OCI? Can you understand the difference?
Yes, ma'am.
Right. So this together will come in one statement of profit and loss. But this one item like revaluation gain will go to OCI. Other than that, it's same. So in IFRS we'll split this, but in Ind AS we'll together call it as SOPL. Right. So let me then what are the things? Financial position is nothing but our balance sheet. Then statement of changes in equity is what? For example, in the beginning of the year, I'm having let's say 1 million or 1 lakh worth of shares, but in between the year or at the end of the year, there is within that current year, I'm issuing few more shares. So what happened? The beginning 1 lakh was my share capital. End of the year, it may be to 1,50,000. It's moved. So this changes I'll be showing in a table called statement of changes in equity. So I think for theory point of view, you must know what is this. Then statement of cash flow is actually what are the inflows and outflows of cash under three different categories. Whatever we have, there is operational activity, investing activity, financing activity. In this three criteria, how you are mobilizing cash and how the cash is outflow, it's flowing out. So both will be analyzed in a statement called statement of cash flow. Then notes to accounts is nothing. For example, it's very simple. The calculations, the rough work, whatever we maintain. For example, if I'm going to depreciate and show an asset, everything if you're filling in your financial statement, it looks very awkward and it will be going pages together and not in in a presentable manner. So we will take all this working notes to accounts, and sometimes the assumptions, you might be knowing the depreciation, which method you're following. All such things we will add into notes to account. As an added fact, in any company's financial statement report, you'll be having close to 3,000 working notes. 3,000 disclosures will be there approximately for any company's financial report, year-end report. So this is something you must know about financial statement. So for A's, what I'm doing, I'm going to share the entire screen so that toggling between the screen will be very comfortable. Right. So right. I think the Mind Master is visible now. Right?
Yes.
Yes, ma'am.
Thank you. So this is about the financial statement. So let's go. Okay, what is this financial statement? In a colloquial term, we'll call it as a post-mortem analysis. Means to say it's happened already. Then why are you analyzing? Why are you analyzing? Because there are many reasons. The users are there. Many users are there. Till your maybe your 11th or 12th, you will be learning about how to prepare profit and loss and balance sheet. To a certain extent, you'll be learning how to calculate ratios. But now preparation of financial statement, maybe the classification of subsidiary books is manually done. But preparation of financial statement until date will be done by the computer. Computer will do that. Then what is the human investment there? Interpretation. Interpretation is the main thing which a human is expected to do still in accounting technology-based companies. So this users and their objectives, who needs what information in this financial statement, that I'm going to cover in this. So first, I'm speaking about management. Okay, there's a spelling mistake, bear with me. So first, I'm going to see about management. So few of the users are taken, few more might be there, but these are the majority of the users mentioned. So number one is management. Who you call it as management? Or else, why they need the financial statement? Why a management need a financial statement? We need a financial statement. Yes. Since it's an online session, I want a continuous interaction. Yeah.
Ma'am, actually, many of them are watching only through YouTube live, ma'am.
Okay.
Yeah. Only link is shared only with the organizers.
Okay. Thank you, ma'am. Thanks for the information. So I'll just go ahead with, right? Thank you. So management are responsible. Actually the financial statement projects the stewardship of the management. What are the strategies they've implemented, the plans, tactics, everything. Is it working or not? Is my company going in profit? Or else if there is any deviation, what corrective action I should take? All such things the management has to do. And for this, they have to see the financial statement information. So in general, I can call it as they need the financial statement for decision making. Maybe for example, if you take Ford India, they left India recently. So why they decided to leave? Maybe the financial statement projections were not good, the cash flow projections were not good, or they were maybe facing some losses in a particular sector or particular geographical area. That's the reason they left India. So this decision they have to take means they need the financial statement. This is one. Then coming to the investors. So when you take investors, who are investors? Investors are someone who wants some return for their investment main, and at the same time they also want security for their for the shares, whatever they've invested. It can be in the form of shares or debentures, but altogether we call them as investors who invested in the business. So they want some security. Let's say the company like Satyam, the scandal, what happened in Satyam, the Satyam scandal, or else the Yes Bank and all, recently it went into bankruptcy. So all the investors who and all are investing in that, they want to know how the company is performing before investing, or in case they want to sell and come out, means they have to see how the company is performing again. So for the security and the profit motivation, security reasons and profit motivation, the investors want the financial statement and they want to see the projections, how it is. And one more thing is, you can think, will everybody understand what is written in the financial statement? The basic assumption of IFRS standard is users are rational and they are aware and they have sufficient knowledge to interpret the financial statement. Interpretation will be written, but they will understand. That is the basic assumption of IFRS, that is financial statements. So upon that, you need not worry about whether the investor can understand or not. Without using any technical jargons, definitely they can understand. So the next one, this is about the second, investors. Then I'll move on to employees. So why an employee want to know how the company is performing? Of course, job security, the same Ford, I'll take it. So 40,000 employees almost lost their job in India. So the job security is an issue. If and only if they got to know the company is not performing and they may leave out, they would have looked out for a different job, or a good decision they would have taken. So definitely they want to know how their job is, especially their particular region, their particular segment, whether it's performing or not. So that thing and all they'll get to know in the financial statement, because segmental reporting is also a part of financial statement. Then bonus, that is, will I get any bonus? Is my segment performed well, or did I generate any profit? That quotient and all, they'll get an idea. And the third one is benefits of senior managers. They'll be crucial to know how my auditors are getting, how they are remunerated. Why? Because a good financial statement, good company, it is one among the corporate governance principle. That is, there should not be too much gap between the division of the remuneration. There should not be too much gap between the remuneration of the directors and the employees of the company. There should not be multifold differences. That is a pure corporate governance principle, ethics. So accordingly, they may wish to know how the senior employees are remunerated in the company. So, and in a financial statement, there will be a separate segment where, means to say, in the financial report, there will be a separate area where it will be the declaration of the remuneration given to the directors will be mentioned. Then we have lenders and creditors. Of course, if they want to lend someone, and they want to know the credit worthiness of that company. So for example, some XYZ company is there and they want to lend them, they want to give goods on credit, or they want to give them some loan and all, then they should know how the company is performing, how the return they are earning, and how about their safety of funds. In case if I'm giving, won't they get into insolvency, or are they in a very stable financial position? All such information they might be requiring, so they need a financial statement. Then customers, why? Because for example, customers means immediately we should not think only about mobiles, or now mobiles also are coming in lakhs, 1.5 lakhs, 2 lakhs, up to 2 lakhs you have mobiles, more than that as well. So whenever you're buying a product, let's say a huge plant I'm buying or a machine I'm buying, so when I'm buying such kind of machine, so I need the employee, I want some continuous service, especially after sales service. If there is any mistake in the product, I need to exchange it, or if any fault is happening, I need a person to come and serve it. So I want to see the longevity of the company. Will the company be there for a quite long time? Will I get this type of services? All such things I want to know. Again, I'm telling the example of Ford, because that is a recent thing what happened in the business. So if Ford is leaving, means the cars, whatever sold by them, now they have to rely on a third-party service provider. And if there is any spare parts missing, means it's very difficult to get, because they've stopped production in India. They have to import it. The cost will be high. So the customers who want to invest in huge capital goods, especially, they want to know how the company is performing. So for that reason, they need a financial statement. Competitors, obviously, they want to know, to do some decision making again, how my competitor is performing well. what are the area they are strong, all such things. Of course, tactics and all will not be seen. You cannot find it out in financial statement, but they can find out which are the area they conquered, where their revenue, what is the industrial average, and what this company is making, and where I am. Like that, I have to compare, means I want the financial statement as a competitor. The next is government. So if I take the government, so if the government is planning some financial policy, industrial policy or something, they want to know how the companies in that area, that industry is performing well. And very importantly, to levy the tax, whether tax is paid properly or they are doing any evasion as such. So tax avoidance, tax evasion, you might be knowing. So whether they are doing tax evasion as such. So all such things. For that reason, the government might be interested in your financial statement. Too much emphasis is given to tax. And the last one is public. Public, because let's say if you take Chennai or Bangalore, these are tech areas, right? And Bangalore is called as Silicon City. If you see, majority of the IT companies are located in the outskirts of the company. They'll be in the suburb areas. What are the reasons for that? The reason is they like the government want to promote a proper development all over, but the companies are getting SEZ, that is special economic zone provisions. What are the reasons? That is what the company is giving back, what type of employment they are generating. Are they doing any harmful activity as such which will spoil the environment? There are some provisions which they have to make in case, for example, it is a petroleum extraction industry, or else in India, if you take, it's a mine industry. So if they are into mine, so definitely they have to repair when they are moving out from that particular locality. So this type of thing there, the public will want to know what type of contribution they are doing to the society from where they are taking all the resources. So for that reason, they might be interested in knowing the financial statement. I think up to here it's going good. Shall I proceed further? Right. Yeah, sorry, I forgot. The session is happening in YouTube. Sorry, YouTube, right? It's published.
Yes, ma'am.
Right. Okay. Done. So let's go with the next one. That is requirement of IAS. Why you need international accounting standard now? So I said, now only I said, I want these are my financial statement. These are the users. Let's say, and one more thing I want to tell. Why I'm speaking about cross-border transaction, global investors, uniformity, transparency, all are targeting on one particular thing, that is globalization. Because of globalization, I have to stress here, because of globalization, you need uniformity in presenting your financial statement. Otherwise, the people cannot understand. For example, if I ask you, how will you prepare your balance sheet? So the default answer will be this balance sheet. Right side will be my assets, left side will be my liabilities. This is the horizontal, right? But if you see the US GAAP, they will prepare assets here and liabilities here under US GAAP. So majority of us will sometimes we will forget assets, liability. We'll sell right hand side, left hand side, like that, for easy understanding. The thing is, the preparation model, if it is differing, it will be very, very difficult for the users to understand, first of all. And nowadays, we are not only investing in a company which is located locally, we are also trying to invest internationally. So in that scenario, there must be some uniformity for understanding. And in India, why we require, why, when it happened, I think you might be knowing about the 1991 LPG, that is liberalization, privatization, globalization principle, right? So after that, what happened, majority of the foreign companies were allowed to trade in India with a lot of liberalization given to them, and they started investing in as well. So when you are doing business with other country, there must be some uniformity. Otherwise, you cannot understand what's going on in the financial statement. Even they are approaching towards bankruptcy. Also, you may not able to predict it. So let's say I'm an investor. I'm in India and I want to invest in a company based in US or UK. I want to invest in UK based company. So that time, obviously, there will be some financial transactions where use involving two different types of currency and one hedged currency possibly. And then I'm an investor from India. I'm investing in a UK based country, so UK based company. So two types of different countries involved in this. Then obviously the understandability of the financial statement will be a big question mark. To avoid that, we need international accounting standard. So it actually give a lot of privilege for the cross border transactions. Global investors will be benefited in this, and uniformity in the accounting principle. If it is a provision here and I'll be putting in my debit side of profit and loss account, or else it's an expense for me as well as a liability, means it is an expense and liability even for a person who is doing accounting in UK. That's the intention here. Uniformity is a very important thing. Then transparency, because as per IAS and IFRS and all, transparency is a very, very important part, stressed again and again, to avoid and that is misusing the funds. First of all, if money collected for a specific fund, should be invested for that specific reason only. So the transparency issue. So these are the requirements of IAS, that is International Accounting Standard. So now I've finished the basic intro, like what are financial statements, then who are the users and what they need, what they look at it, and what are the requirements of IAS. Now let me go on to the components of IFRS. What and all come under components of IFRS? So again, for A's, I'll just copy this. Okay. So components of IFRS, if I take it, so the first one is IAS. IAS is International Accounting Standards. Then IFRS is International Financial Reporting Standards. What is this SIC? SIC is Standards Interpretation Committee. Like that, I have IFRIC, that is International Financial Reporting Standards Interpretation Committee. So all this together, I'll call it as IFRS. So now, right. So before going, what are these? So before telling all this are IFRS, I just want to tell you this part, that is transition part. How, what is IASC, what is IAS, IASB, and IFRS, all such terms you should understand to understand this components of IFRS. So this I'll take you through as a story so that it will be easy for you to understand. So this IFRS, IAS, everything originated in UK. It's a London-based committee, which we call it as, okay, let me change the ink color. And here onwards, I'm starting with IFRS. Okay, first I'm going with IASP. IASC. So what is this IASC? This is actually International Accounting Standard Committee. What are they? These are, this committee is a London-based committee and it was established. Okay, this is a London-based committee and it was established in June 1973. Okay, what for they have established? They've established like to create some uniformity. Before that, before this IASC coming into picture, everybody had their own way of preparing the financial statement and publishing. Okay, the companies were there right from East India Company was there before independence also. So we have companies in India for quite long years, centuries together. So this London-based IASC, they decided, it's a group of member countries, they decided to have some uniformity, at least among the members. Totally 144 countries are a part of it, and the number is still increasing. Okay, these are the members so far, and the numbers are still increasing. And this London-based committee, they've decided to have some uniformity among the member countries, especially the trading partners, so that some uniformity is there, means there will not be any disruption or any mistrust happen while trading, or to disclose, or to have harmony or having transparency, whatever be the reason, they want some uniformity in the accounting standard. So they've started, but initially when it started, there were only very few 40s, and later on 75 countries were there. And from India, ICAI, that is Institute of Chartered Accountant of India, that is Chartered Accountant of India. Okay, we'll call it as ICAI. Henceforth, I'll be referring only ICAI. ICAI is also a member of this IASC. Okay, ICAI is also a member of IASC. And what is the job of IASC? They will be checking in the environment what are the changes happening in the economy. They will check, is there any requirement for a new accounting standard, and accordingly, normally what and all they'll check means, is there a change in economic and social conditions? Is there any new technology coming into picture? Is there any new demand for the users users regarding, and accordingly one accounting standard will be revealed accordingly. So I'll just give an example of inventory. Inventory is stock, which will come under IAS 2. IAS 2 means inventory. How will you value an inventory? And according to IFRS as well as Ind AS, inventory should be valued at cost or NRV, that is net realizable value, which is selling price minus cost to sell, whichever is less. So this is one of the accounting standard. Why they decided? Maybe there will be a lot of confusion how to value a stock. Shall I value with the profit or without profit? So I'm going to save it, when I should give the cutoff of valuation. All such many confusions might have arisen. So what IAC thought, okay, let us discuss about introducing one standard, and they've introduced IAS 2. So this is just an example. So like that, what IAC will do, they will introduce an accounting standard, and all the members will try to implement in their own country. So this is how the accounting standard came into picture. And this IASC actually is remained as IASC between 1973 to 2001. Till then, they were called as IASC. Then after what happened, due to some changes, they started restructuring. So this is the first story, IASC. Then second story, what happened? This IASC, it went on few restructuring in their organization. And finally, this IASC is converted to IASB. What does IASB means? It is International Accounting Standard Board. Okay, so when they became International Accounting Standard Board, they became in 1st April 2001. Okay, till 31st March 2001, it was IASC. And after that, they've changed the name as IASB. And they started issuing IFRS. So when it was named as IASC, they were issuing IAS, that is International Accounting Standards. When they became IASB, they started issuing IFRS, that is International Financial Reporting Standard. So what is the difference? That is nothing. It's reporting. It's more focused into the reporting way. And what happened after that? The standards, many standards were issued under IASC. For example, few of the standards I list you. So IASC, okay, they issued IAS. What are the IAS they've issued? IAS 2, inventory. Okay, then IAS 16, This is PPE, they'll call, that is non-current assets, how you treat a non-current asset. Like that, you have IAS 36, impairment, 37, provisions, 38, intangibles. Like that, you have many, 41 for agriculture. Okay, so like that, you are having, and after that, what happened when they became IFRS? They started issuing IFRS 1, that is first time adoption. Okay, here IAS 1 is what? Presentation of financial statement. So IFRS 1 is about first time adopters of IFRS. Then IFRS 2, 3 combinations, business combinations. Like that, they started issuing up to IFRS 16 till date. And India, how they will implement in India. So this is about IAC, IAS, then IASB. Just a minute. This is the transition happened. IASB, it changed to IFRS. So this IFRS standards are named as 1, 2, 3, 4. Okay, after becoming IASB, what they didn't scratch, okay, what are the old standards and all not valid. They didn't tell like that. What they said is, what are the old standard that will also be there, and the new standard also will be there. So IAS, I think IAS 6 or one standard was there previously. Yeah, IAS 17 was leases, and IFRS 16 is also lease. What happened? That is outdated. They have updated and gave a different standard called IFRS 16. I'll just tell you here once again. That is International Accounting Standard 17 and IFRS 16. Both are leases. How to account for lease. But since IFRS 16 issued leases, the old standard was cancelled. Okay, so if there is a requirement, they will remove the old standard and they will issue a new one accordingly. Otherwise, they will remain with the old one itself. So this is how. So now, now I'll tell you the third part of the story. So the first part, what I said, it is about IAC, that is International Accounting Standard Committee. 144 members are there, and it's a London-based committee. Our ICAI, that is Chartered Accountant, is one among the member. And then I told about IASB, that is this IAC converted to IASB because of the changes in the economy and environment, and some restructuring happened and it converted to IASB, and henceforth the standards issued by them are called as IFRS. So this IAC issued IAS and IASB issued IFRS, and now both are prevailing in the society. So then we go on to the third story. What is the third story? You must know what is SIC. What is SIC? It is Standards Interpretation Committee. Okay, now two standards I have. One is IFRS and one is IAS. Both are there. Which standard this committee will interpret? This committee will interpret only IAS. Why you need an interpretation committee? If you see the old documents of Tamil documents of land registration or any of the Dravidian languages, I know only about that language, old documents, land documents and all. Even though your second language is Tamil or Kannada, whatever it is, you cannot understand. You need a lawyer to read for you. So that's the same thing. You may not understand the standards issued. I told you, right? IAS 1, 2, 16, 36, 37, 38, 41. You may not understand some of the standards, or in spite of giving standard, you may have some doubts how to apply in this particular position. So this SIC will help the member countries in applying in their own nation, how to apply for that. The interpretation committee will, they will interpret and give you how it should be applied. So likewise, I have IFRIC. This is International Financial Reporting Standards Committee. So IFRS, just a minute. So IFRS is International Financial Reporting Standard Committee. So they will interpret the IFRS standards and tell the member countries how to implement it. So this is the rule. So finally, now I'll tell you what is IFRS, the components of IFRS. Now you'll understand better. So what are the components of an IFRS? So IFRS means it includes IA standards, IFRS standards, interpretations given by SIC, as well as interpretation given by IFRS. I think you can understand what is IFRS right now. So this is about the component of IFRS. This you must be knowing. Then let's go with the next one, that is Ind AS. Okay, what is Ind AS then? Right. In India, you might be knowing we don't have one single authority. And before going that, you might be knowing there is a recent change, not recent change, maybe 8-9 years back, we had 2013 Companies Act. Before that, it was a quite old Companies Act, that is 1956 Companies Act, very old Company Act, and it was very much active for quite long years. But at last, it got changed to 2013, and recently 2019 amendment also you got it. So why the change happened? What is Ind AS? This is our next topic now. What is Ind AS? That is IFRS converged with Indian accounting standard. So what this ICAI will do, they will get the standards from IASC and IASB, and they'll try to implement in India. How, under whose headship, under whom this ICAI is working is Ministry of Corporate Affairs. Okay, MCA we'll call, Ministry of Corporate Affairs. Through under them, they ICAI through MCA have appointed ICAI to implement the standards in India. Okay, so this is how the flow goes, and they will ICAI will check how possibly they can implement in India, because the rules and regulations how it is in UK or London, that will not be the same here in India to apply very easily. In India, IFRS cannot be applied as such, because we have a regulatory authority separately for banks like RBI. Then we have a regulatory authority for stock exchanges, as SEBI, and SEBI and RBI having a mix match and controlling some of the financial instruments. So like that, various regulatory authorities we have in India, and the provisions also, and various provisions also are prevailing. If I want to implement IFRS as such how it is in UK, in India, it's not practically feasible at all. So what they've done, they've converged it. We'll call it as convergence of Indian accounting standards with IFRS. What is this Indian accounting standard? The IAS, when it is implemented in India, we'll call it as Indian accounting standard. Now it's we are converging IFRS also into picture, so we renamed it as Ind AS. Okay, so this is called Ind AS. So in short, I can tell Ind AS is convergence of IFRS with Indian accounting standards, and it's done through this Ministry of Corporate Affairs in consultation with National Advisory Committee on Accounting Standards. So actually, I can also tell it is done by Ministry of Corporate Affairs in consultation with NACAS. You can find out if you search this online. This is a National Advisory Committee on Accounting Standards. In consultation with them, through ICAI, this convergence is happening in India. And one more thing, if I call IFRS 1 as adoption, that is first time adoption of IFRS, means in India, this is named as Ind AS 101. And if it is IFRS 2 means it is Ind AS 102. Like that, IFRS 16 means it is Ind AS 116. So all the IFRS standards starts from 100 plus, 101 onwards in India. Whereas IAS and all implemented as IAS itself in India. But when IFRS came into picture in India, we started implementing as 101 to 616, like that. So this is the way the convergence happened. So this is about Ind AS. Let me go to the next topic, the last one, implementation plan. Okay. So actually, they tried to implement IFRS IFRS standard. Merging accounting four phase there are many implemented in 2013 regulation of April 2016, and this is for listed and 500 crores. Net asset from my bodies business, and that is called greater than or equal to any company. They second phase where the effect from the next year onwards. One into IFRS standard preparing then insurance companies having a net worth of greater than or equal to items accordingly, and how they have to prepare. Even just this year I'm in 31st March 2022, I want to prepare financial. I have to prepare 31st March, prepare and show financial that is who have not in financial 250 crores to 500 work. And one more topic, one more also there as per your implement how to work in one of the accounting standards will be. So how it board called AS, that is they come under I say standard board one in Chennai, Bangalore, if you see that on these spaces and huge machines in these spaces. Will undergo a study and how they will undergo a study. So the first accounting for the requirement for a standard. Okay, this will find out. This will be what they do. That here also, guys, okay, study groups. Is it not? Study groups will be established. This study party like that. Position. This will come in profit and loss. This will come in balance sheet. So how you will disclose it, all such information all will be there in the proposed standard. Then again, one more information also will be there. Who has to implement the standard immediately? That is, which class of enterprise should apply immediately this kind or this standard, like that. All such information will be there in the proposed draft. Then what will happen? The member party, the member groups, everybody will be discussing about the pros and cons, and finally, again, the proposed standards will be amended with further changes, and then a final draft will be issued. And this draft is called as a new accounting standard introduced in India. So, with the continuation, I'll just show you one of the accounting standard just for your understanding. So this is about intangible asset. Intangible asset means immediately we'll tell goodwill. Actually, goodwill, we will not take it. We'll call research and developments. Intangible asset, of course, the license, franchise, patents, copyright, brands, and all. So these are the points which we'll discuss about. All will be there. That is, how will you go with, what are the measurements? How will you recognize initially? How will you recognize subsequently? So accounting standard means it is a very, very vast topic. So this is one of the example of an accounting standard. So after